Welcome to the Deep Dive. We're the place where we take those dense reports, the complex data, and really try to give you the clearest insights. Today, we're pulling back the curtain on, well, one of the ad industry's giants that maybe doesn't get talked about quite as much, AppLovin Corporation. Our mission here is to unpack their latest quarterly report. That's the Form 10Q, filed for the period ended June 30, 2025. So we're going to take this incredibly detailed financial document, really dig in, and pull out the most important bits of knowledge and insight for you. Think of it like your shortcut to being genuinely well-informed about a company that's kind of quietly shaping how you see ads and interact with apps every day.
Absolutely. And this isn't just about looking at numbers on a page, right? It's about understanding the strategy behind them, the shifts AppLovin's making. We want to connect that raw data to what it actually means for their business, the industry, their big bets, and yeah, the significant headwinds they're navigating too.
Okay, so get ready. We're going to unpack some surprising facts, maybe a few aha moments about, well, one of these hidden giants in advertising. Let's jump right in. So at its core, what is AppLovin? Reading through the 10Q, they position themselves as a leader, right, in the advertising industry, providing these end-to-end solutions, helping businesses reach, monetize, and really grow their global audiences. And the heart of it all seems to be this AI-powered engine. AXON, they call it?
Exactly. AXON, that's their advertising recommendation engine. And, when you look at the numbers, that AI approach, it's clearly working. For the 3 months ending June 30th, 2025, revenue was up a striking 77% year over year, reaching $1.3 billion.
Wow.
Yeah, $1.3 billion. And for the 6 months, revenue up 74% to $2.41 billion. The report points directly to improved app discovery performance as the main driver.
Okay, 77%. That's massive growth. Does that really stand out even in the ad tech space right now for a company their size? And what does improved app discovery performance actually translate to for users or advertisers?
Oh, it definitely stands out big time.
Yeah.
Especially at this scale. And the report gives us the specifics, which are quite interesting. Net revenue per installation. That jumped 70% in Q2, just massive.
70%.
70%. And at the same time, the volume of installations also grew by 8%. So you've hit on it there. It's that dual success, higher value and broader reach. That's really tough to pull off simultaneously.
Right. That dual success, that's the key takeaway. It's not just squeezing more money out of the same people. They've figured out how to broaden their reach and increase the value of each new user connection. That seems incredibly powerful in today's market.
Yeah.
And what about the bottom line? Does that look healthy too?
Very healthy. Net income from continuing operations, it jumped significantly from about $301 million to nearly $772 million for Q2 year over year.
Okay.
So strong profit growth, not just revenue. And they also reported really robust cash flow from operations, hit $1.6 billion for the first 6 months of 2025. That shows strong cash generation, which, is crucial for funding everything else they want to do.
Okay, so a powerful engine financially. But what about strategy? Their roadmap. AppLovin hasn't exactly been static, have they? There's been some big shifts. The most significant recent one seems to be selling off their apps business, completed right at the end of the quarter, June 30th, and now that whole segment is listed as discontinued operations. That's a major pivot, isn't it?
It really is a very clear signal. And financially, it had quite an impact. It generated a pre-tax gain of $106.2 million in Q2. AppLovin also got shares in a company called Triple Dot as part of the deal, about 22% ownership, valued at $285 million. But interestingly, just before the sale, they also recorded a pretty large goodwill impairment charge, $188.9 million, tied to that same apps unit.
Whoa, hold on. A $189 million impairment charge. Does that basically mean they acknowledged it wasn't worth what they had it valued at on their books before selling? Sounds like maybe a necessary correction, even if it meant taking a shit on paper first.
That's exactly what an impairment charge like that suggests, yes. The carrying value was higher than what they could recover. So, strategic. But it involved reevaluating the asset's worth. But selling that business, it frees them up, right? To focus on these newer areas they're pushing into. Their forward strategy seems focused on expanding beyond mobile games. They mentioned e-commerce and also connected TV, CTV, mainly through their Whirl acquisition.
Right, Whirl. And those are huge markets. E-commerce, CTV, they definitely require serious investment, as the report notes. But AppLovin seems to be thinking even bigger than that, which brings us to the detail that really jumped out at me. The TikTok connection.
Ah, yes, the TikTok mention. So back in April 2025, the report states AppLovin gave a preliminary indication of interest to the President of the United States, exploring a potential purchase of TikTok, specifically in all markets outside of China.
Okay.
Now, they're very careful to state this is preliminary. No assurance of any deal actually happening. It's just an expression of interest at this stage.
Still, this TikTok tease, it's incredibly bold. What does that signal about their ambitions? I mean, is it pure ambition, or could it also hint at maybe needing a big diversification move fast, given some of the industry challenges?
It definitely signals massive ambition, a willingness to swing for the fences, use their capital, use their tech for something truly transformative. It suggests they see themselves competing at the absolute top tier of the entire advertising landscape, not just mobile. But as you hinted, even with strong growth and big ambitions, they operate in a really complex world. The 10Q is pretty clear about the factors affecting performance. Things like the broader economy, inflation, high interest rates, geopolitical stuff, the conflicts in Ukraine, the Middle East, US-China friction. All of that impacts ad spending and their operations globally.
Right, those external pressures. And then there's the tech giants, Apple and Google. Their platforms are basically the landscape AppLovin operates on. We know policy changes like Apple's IDFA, Google's privacy sandbox, new consent rules. They directly impact how AppLovin works, how they track, how they monetize. The report says the impact so far has been relatively muted, but how do they insulate themselves? It feels like building on shifting sand sometimes.
It's a constant adaptation game, absolutely. They have to innovate constantly just to keep up with the platform rules. And beyond the platforms, there's the whole regulatory maze. It's getting incredibly complex. You've got GDPR, CCPA, CPRA, then PIPL in China. Now, emerging AI regulations are coming. And the report even mentions a new U.S. Department of Justice rule from April 2025 restricting certain sensitive data transfers to countries of concern like China. That adds huge operational and legal hurdles.
Wow. It's like trying to navigate a minefield almost.
Yeah.
And what about internal risks? Does the report mention anything there?
It does. They note a dependence on key management, particularly the co-founder and CEO. And their structure, they describe it as a lean organizational structure.
Efficient, maybe, but vulnerable?
Potentially, yeah. Efficient, but maybe more vulnerable to keep people leaving. Plus, the challenge of just maintaining their company culture as they grow so fast, that's often harder than it sounds.
Definitely. Growing pains are real.
Exactly. And finally, on the financial risk side, we should mention their debt. The report notes substantial indebtedness, around $3.6 billion. So they need to keep generating enough cash flow to service that debt, especially alongside all these growth plans and potential big moves.
Okay, $3.6 billion in debt, that's significant. You also mentioned strong cash flow earlier. How does that translate for shareholders? What are they doing for the people who own the stock?
Well, the report highlights their share repurchase program. They bought back $1.3 billion worth of their Class A stock just in the first 6 months of 2025. And they still had another $1.0 billion authorized under that program as of June 30th. And interestingly, it's now linked to their free cash flow. That seems like a strong signal.
Using cash to boost shareholder value directly.
It is a strong signal, but what's also really crucial for shareholders to understand is AppLovin's stock structure. It's a multi-class setup. You have it's 68%. So that makes them a controlled company under NASDAQ rules, right? What does that mean in practice?
It means those insiders, the voting agreement parties, can effectively determine or significantly influence pretty much any major decision that requires shareholder approval. Think board elections, mergers, major sales, anything like that.
So for the average Class A shareholder, your actual influence is, well, pretty limited. You're kind of along for the ride with what the controlling group decides.
That's the practical implication, yes. It's a common structure, especially in tech, but vital for investors to grasp. So, pulling it all together, you've got AppLovin showing really impressive growth, making bold strategic moves like the app's divestiture, expanding into new areas, even floating this huge TikTok idea. But they're doing it all against this backdrop of, tech platform shifts, intense competition, a really tricky regulatory environment, and significant debt.
That really is the core tension, isn't it? How do you keep innovating, keep growing like that, when your success is so tied to things you don't control, like Apple's next iOS update, or global economic shifts, or new regulations popping up? It sounds exhausting.
It's definitely a high-wire act, and it leads to the big question going forward. As AI keeps changing advertising, as privacy rules get stricter, will AppLovin's current bets pay off? particularly these big moves into broader markets, and maybe even something like TikTok. Will they secure their future, or could they introduce whole new kinds of challenges? What aspect of this whole picture will you be watching most closely in the next few quarters?